Good morning and happy Friday, everybody. It is 8:02 a.m. Chicago time on August the 15th, 2025. This is TraderBite episode number 2673. You know where I'm going to ask for a little mic check today would be great. Quick reminder that it is Expiration Friday for options today. It's the third Friday of the month. Amazingly, it is the middle of the month. August seems to have started just recently, and we're already 2 weeks in. This is, again, the third Friday of the month. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Back from vacation. Here we are. Thanks for being here. We'll start again with our process. Remember, trading is about process. Process is our focus. Outcomes are not in our control, and the results come from process, discipline, a plan, risk control. That's what results come from. All we control is the process. So you're seeing the same thing kind of over and over again, and that's why. So we'll start with the pre-market summary sheet here. The market is pretty much mixed. You can see the S&P only up 7 points from yesterday's settlement. The Nasdaq's down 31 points, which isn't much. But also pay attention to the RN and RVOL columns. Pretty light this expiration Friday. These are, I'm referring to monthly expirations. Next month, third Friday, will be the expiration of the actual futures contracts. But today, this is just monthly expiration, which kind of brings in some delta hedging in futures. It's much easier for market makers to hedge their equity positions, index positions, index options in the futures dynamically in and out using the S&P, the Nasdaq, and so on and so forth, including their micro structures. But right now, 66% of the 20-day average range as of this moment, pretty low, pretty off. Still another summer Friday. Is the news feed too loud? Is it distracting this morning? I hope not. I just need to make sure I can hear the news. Crude is off again today. Crude popped higher yesterday. We'll talk about crude. Crude's definitely got my attention today, and it's off 1.31%, almost a buck earlier. Gold still holding on to that 3,400 area, and so on and so on and so forth. I'm not going to go through it all with you. Bitcoin also pushing highs. As far as themes, Chinese industrial production retail sales lower than expected. U.S. retail sales in line. This was a highly anticipated number this month. Remember, before the tariffs, lots and lots of purchases to beat the tariffs, like stocking up, and then the tariffs came in, and then the numbers kind of have been a little bit softer, and now we are still going soft. U.S. import prices higher than expected. Of course, tariffs are going to influence import prices, export prices in line. U.S. President Trump says we'll be setting tariffs on steel and chips next week. Remember, he extended, I think earlier this week, I was tracking, but not so closely. I lose track of time on vacation, which is what we're supposed to do. Although I wasn't really on vacation, I was online every day doing work, but to a limited extent. But at some point, Trump extended China's tariffs by another 90 days. So China's received some really special treatment, 90 days, 90 days. Keep extending these, keep pushing up against the deadline and then extending it. So steel and chips are next. Retail rate will be lower at beginning, but if companies don't build in the U.S., rate will be higher. The thing is, he's giving concessions to those who promise to build in the U.S. as well. So it's kind of interesting. And you get some special treatment if you show up at the Oval Office and give him a disc award, I guess. U.S. President Trump says China's not doing well economically. Applied Materials earnings call disappoints U.S. governments in talks to take stake in Intel in order to support the Ohio chip facility. Berkshire Hathaway takes stake in United Health and offloaded Apple shares again in second quarter. United Health being the largest private insurer in the U.S. What's left for today? We had, again, retail sales came in line at 0.5% versus consensus, 0.1% for export prices versus consensus in line. Zero import prices higher, 0.4, expected zero. That's a fair bit. New York Empire State Manufacturing came in pretty strong, 11.9 versus zero. And then we're looking at industrial production later, expecting 0%. And then the big one today is Michigan sentiment. Michigan sentiment expected at 62 this morning. We get business inventories as well, expecting 0.2. So look out for that number. Michigan sentiment could really move us around. Okay. So that's what's on the calendar. The distribution this morning in the overnight session, we have a multi-distribution profile, very clear actual double distribution today, 124,000 contracts, pretty much in line. And the inventory is 98% long. We settled at 64.90.5 and have traded 98% of the volume above that price. The range is 22 points, relatively low, but still in line. That's what's on deck with the S&P. Let's take a look at the market. What's happening here? Yep. So let's switch. Take a look at the markets. Wow, I'm very orange in this thing. So what do we have as far as the S&P is concerned? Let's line this up. We start out with the TPO chart, and what we've done is since the beginning of August, since I left, I flew out July 31st. You could see there was a pretty solid test down into the 62.40. We did check this low. Where's my whiteboard? Sorry, hang on one second. Doesn't look like my whiteboard is here, so I cannot draw on the screen. There it is, whiteboard. Boop. One second. Sorry, I left my computer for a while and now it's not operating properly. Okay, whiteboard's there. Okay, so we pushed new highs, new highs, new highs, new highs, new highs, and new highs, new highs, and so on. We've made a lot of new highs so far this year, and then we finally dropped. And what we did is we tested this 62.41 from earlier. We went to 39.5. It dried up pretty good. You could see that day, if I zoom in on the day of the test when I was gone, of course, it sells off pretty good the day I am gone. You could see that it opened at the high. We had a gap. So I'm just going to run you through everything. Anything from everything that's happened since then. We open up at the high, and gap rules, we have to stand by and look for responsive buying, which is what's expected. If we gap down, we expect responsive buying because we're in the money. We expect the market. We expect participants to buy up to secure profits before or right after the open. If not, then, and we have an open representing the high on a gap down, this is a day where we throw away our buy button and we only can sell or stand by. And so this is a perfect example of that. We open at the high and we extend lower, and you could see that there was very little interest beyond the IB. The IB was quite wide. The IB pretty much encompassed the whole day's action, and the extension down showed very little interest finishing, and it finished right on the point of control. The point of control in TPO and in volume, right in the middle. So what this market did is it gapped down and balanced. It didn't gap and run. It gapped and balanced. An interesting situation given the way it opened. We don't expect that very often. It is a Friday. The next day we see the opposite. We see it open. We have an internal gap. So the difference between the open, the green triangle, and the close creates what's called an internal gap. And on this day, again, we're expecting it to respond back on this day because we had a balanced market. We expect at least a test of value high into the 84. Nothing, no such thing. It immediately pushes up. We have a quick push up. So we throw away our sell button and we're leaning buy side. And this is a breakout market here. Ultimately, it ended up getting into the gap zone. 63, 58 and a quarter was the gap low. 63, 63, 58 and a half was the high of this day. So it shows us that intermediate to short-term traders were in control that day. To respect an old gap low like this tells us that the OTF is not really in play. We finished in a P-shaped profile, quite bullish. We shift the point of control higher. The TPO and volume POC are in line. So this is relatively bullish. So the question at this point, once we get to this day, is all right, now the very next day, what is it going to do? Is it going to open, test down into the P shape, possibly the point of control, and then come back into this range? If it comes back into this range, we expect that it'll run up relatively easily. This is a very clear short squeeze. But what it did here is it opened, it tested into the range, into the gap range, and then finished with a B-shaped profile. So this is a market that it's actually looks like it is balancing. And that's what I wrote in the Convergent Market Prep. I said, hey, we've made new all-time highs. We found sellers, came down. We made the swing low. We found buyers. We came up. And then we gapped up, tested up. We gapped up, tested down. It looks like it's probably going to sit in the middle here. And I expected this range here will probably be at least a couple days of play. I was completely wrong. The next day it opened right against the point of control, tests down, makes another P shape. This is a whipsaw market, which is quite common in the regime that we're in, which is a volatility regime. And so the next day we gap up, as I said, once we fill the gap and get into that range, we expect it to run up relatively easily. Why? Because we are in a market that's making new all-time highs. These are opportunities for funds to buy at cheaper prices. So eventually we expect it to come all the way back to the naked point of control up here and to check that high. Once again, it took a bit, and that's basically what you guys have been working on. So since this gap down, this day, higher low, triggers potential for one-time framing up, and then we do get one-time framing up, higher low, higher low, higher low, higher low, higher low, higher low, until Wednesday, and then Thursday breaks, it retests that low, that higher low, giving us what's called a neutral time framing. So right now, even though it's bullish and it's hanging on to that high, it is showing signs that it's maybe extended. So that's where we are today. We do have weak structure here, so I expect this to most likely get repaired. And if that doesn't hold, then your target becomes this 64.12 becomes a key retest area from above. Okay, so we've got 2 days where look at what it did yesterday. It did gap up, it tests up, it extends down, puts in a B-shaped profile. Not yesterday, the day before yesterday, and then yesterday, it opened right at the extreme low, the one-time framing limit, tests down, and then puts in a completely balanced day. And what we have, you can hardly see it here. The white volume profile and the white volume profile are exactly in the same place, and the closing price is exactly in the same place. So when we see that on new all-time highs, it's basically telling us that the sellers are extremely weak. The buyers are not really pushing yet, but the sellers are very weak, because if prices were too high, we would not create overlapping balance with point of control and hold on to the same closing price. This isn't a common thing. And so overall, I expect this to balance, which it did. We formed a point of control right here, an MC point of control over these 2 balance days, and I expect it to continue higher and then higher from here. Let's go to the intraday. Here's the intraday. Higher from here. And by the way, it pushed right into our measured move high. This is a fib extension into new all-time highs. It hit it to the tick at 65.0250. It's not too common that it does that, but it did. And then we pull back the next day. We put this balance day in, and then since then, in the overnight session, what it did is it created this double distribution profile. You could see it with the point of control against the high. See this point of control right up here? That's a lot of fuel to retest that 6502. So right now we're challenging the 6500, but we're very, very likely to take out the 6502. We have a double distribution profile. That double distribution happens to fall right on top of the stock zone. Any pullback from here, any pullback this way is likely to see me getting long for an extension higher. And the next level up from here is that 65.18 area, another measured move target. And unfortunately, that's what we have to trade with right now. So that's the S&P. What are we looking at for scenarios on the S&P? Very simply, we want to see, given the weak high, the double distribution here, we want to see if it responds this morning. Then I'm looking for a test, can push through a higher low right here, and I'm looking to get long for yesterday's high, or the day before yesterday's high, 65.0250. And if it takes that, I'm looking for that to be supported at the 6,500. 6,500 on an expiration day is likely to be turbulent here. But I'm looking for it to sustain that and then start to squeeze into the afternoon before it comes back. That's my primary scenario. I'm trading with the trend, and the market's already indicating that it's got a weak high, so I got a very clear target to shoot for up there. Otherwise, we look for an open that immediately squeezes above the 65.0250, pushes up, and then a retest of the high after it opens. If it breaks and forms what's called a spike retest fail setup, you can see it retests and it fails. This is a short, and then the target again becomes this 64.95. And then, of course, if you're short the 64.95, you're looking for it to break, for a retest to hold, and then for a continuation trade. And in that situation, you're targeting the point of control of the prior day right down into that 64.8540 minimum. You have, we are opening in a gap versus yesterday, so the prior settle is not as high a probability, but those are the two key scenarios. I know it's taking me longer because I have to catch up since I've been out. So I'll skip the NQ, which has the same kind of structure, and jump into the CL immediately. For convergent members, I've been telling you that the CL to me looks quite weak. When I left, it was looking quite weak, and the reason it was looking quite weak occurred right here, and then the retest right up here created this B-shaped with weak structure above. I expect this to force a lot of longs into that almost 70 high to square up. And so I'm expecting it to push lower. If it takes out the 64, I'm looking for a test of 62. We managed to get that right here. We went to 61.87. And then since then, we've been in this balanced bracket. Now, the for crude, if we look at the intraday, crude to me looks like it had a really good test and hold. You could see, it's hard to see here, but had I been here for this, this would have been a very important area right here. See these consecutive bars? This would have been a key over under area. You could see that it made the low, it pushed up, and there was no continuation. Nope, no continuation. It managed to hold this zipper, and then it went above it. So any push into that range, hindsight 2020, I get it. But this is the structure that this is a key structure that I look for. A pullback into that range I would look for signs, order flow or otherwise, to get long into the push higher. This happened overnight, but there wouldn't have been a trade for me. But what we've got here is a market that is trying to work itself back up in crude, but crude's got a lot to deal with. It has this multi-high right here. It's got multiple highs, pretty decent resistance. So on the way up into the 64, crude is likely to do the, what is that? Any Given Sunday, the movie where he says, we're not here to run up the football field. We're here to fight for inches. We're just clawing our way inch by inch by inch. And that's what crude is very likely to do. So the primary scenario for crude today is likely to be a struggle, but we have really excellent structure to define risk reward in crude, in my opinion. And I'm looking for it to, well, it's already open. Looking for this thing to pull back. Looking for this thing to pull back. Let me see where crude is. What's going on here, people? What is going on? Okay. Well, this is kind of shitty because the chart looked wrong to me. Crude coming right back. Unfortunately, this is from last night. I didn't update this chart, but my plan for today was looking for crude to test higher, come down, and it's already done that. So still we have the structure in crude below to pay attention to. Really upsets me when that happens. It's like disconnects, and I'm not catching on until the show is on. But essentially what I expected today is already happening. Crude is likely to test down. Don't get too comfortable with the short because crude is very likely to come back up and take out the overnight and yesterday's point of control. So I expect this thing to stall out to the downside in crude and to reverse to the upside. Okay. I haven't seen any comments, so I'm guessing that you're still on, but are enticed by what we're talking about here. What I'm covering here is what's called auction theory. This is a very strong basis from which to create to have a bias for the day, to create a plan for the day, and to build what you expect. Layer that on top of a price map using stock zones or whatever you want to call yours, support and resistance lines that or zones that are based on how the market responded there in the past. And then you're once that's done, that's the prep. Once that's done, then all that's left is to define where we want to take a risk and then to take the setup. So we need a predefined setup. So we have 6 that we share with Convergent members in the accelerator program. And it's just a matter of, okay, it's come into my zone. I cannot anticipate that the zone's going to hold because I'm not here to gamble. What I need to do is see the setup come in. So the setups are order flow based, price structure based, so price action, order flow, whatever. Once the setup shows up, we put the trade on, define risk, and then the rest is left up to the market. We've done our homework, we've defined our areas. The market has given us a setup. We cannot be chasing trades. The market just shows us a setup. We take it, and then the market decides what we do next, close the trade, punch it in, and it's all over. Okay, that's the goal. I'll catch you guys on Monday. We're back to Monday, Wednesday, Friday shows. Hopefully, you're learning and gaining confidence over time as you're watching what I'm doing versus your homework. I'll catch you all on Monday. Take care.